Hey everybody, Josh Sigurdson of World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and I figured we'd go a bit into interest rates in the United States right now because of course there's big news, this out of the Financial Post. Brace yourselves, investors. We're about to experience the steepest rate hikes since 2006, and it goes on to say Wall Street economists are telling investors to prepare for the biggest tightening of monetary policy in more than a decade. And as the article goes on, with the world economy heading into its strongest period since 2011, which is laughable, Citigroup Inc. and JP Morgan Chase & Co. predict average interest rates across advanced economies will climb to at least 1% next year, and what would be the largest increase since 2006. So I just wanted to use this as a reason to go into interest rates. Going back to, I think it was 2008 to 2012, there was this push of interest rates about 5.5% in order to save the economy. And of course, it's all for nothing. It's futile because it just keeps on inflating the value, or the value of the US dollar keeps falling. They keep trying to push those interest rates up, but they can't push it up enough to stay out of negative territory coming up in the near future. And with that, it puts them into desperation mode. What do you think about this, John?
Well, it's just laughable that they're talking about the biggest increase ever in a decade. That is just 1%. Think about when our parents, back in the 80s, I remember my parents had their mortgage, which was almost 19%. So I just laugh at these, like when they say, oh, it's massive interest rate hike. Like 1% is nothing.
Well,
but
it shows how much dire straits they're in when they can only push it up 1% in a decade. That's the biggest amount that they could push it up in a decade.
Well, it's so mass leverage that the problem is that by pushing it up this much, it's going to really put a massive strain on the debt-based economy, because that's what we've become over the last decade. Since 2006, we really have just used debt to monetize everything, from stock markets to real estate to corporate buybacks.
Yeah, what isn't based on debt anymore that's outside of the free market?
Well, we've said in so many videos that debt has been the major fuel behind all these markets that are propped up the prices. Yeah. And you just constantly need more and more debt in order to keep the system alive. And same with the government. The government is piling on more and more debt because the inflation is rising, that they tell it's so low. It's a massive amount of more cost for the government. The government needs to either raise taxes or go into more debt.
Well,
and they choose, of course, debt because they don't like going and asking the populace, because the populace is paying too much right now.
To say the least. I mean, the government and the banking system, they're kind of like mosquitoes. They feed off of debt, but it's their blood. They drain it from the populace, and they thrive off of it. And as I so often say, if you push someone down a bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, which puts you in perfect servitude, exactly where they want you. Government and banks are fueled off of servitude.
Yeah, well, they're like the mosquito that sits on you, and then suddenly the mosquito, you find it on your shoulder, sucking blood, and you're like, oh, well, then it's done.
Yeah,
that's what's gonna happen. They're gonna hit a huge wall. They're gonna be swatted, and that's gonna be the end of the whole system. When you use debt as leverage, we see with margin debt, it's called in stock markets. It's called home lines of equity. Then there's called share buybacks that they use to, get into debt and buy back their own stocks with debt. It's no innovation. Nobody's creating anything of value anymore. It's just making money with money. But I've seen this so many times throughout history, throughout looking at 1,000 years of history of monetary and the debt-based system that we have today. All these systems that have been before, it just ends up at one point to have what I call the monetization of money, where suddenly you can start making just money with money, and nobody needs to work anymore. And suddenly people are wondering why the sudden collapse comes, which a lot of people aren't seeing, but we're going to be like, oh, wow, what happened? Most people are going to say, even people on Wall Street, they have no clue what happened. But if you look at history, this happens over and over
again. It's the Hegelian dialectic of problem, reaction, solution, repeat over and over again throughout history. And we see that within the markets with these massive debt-based bubbles popping up. No pun intended. They're about to pop. massive derivatives market, but going into the monetary system, which obviously is based in manipulation and debt as well, just looking at fiat currencies over time, I always want to make this clear to people who are new to WAM. All fiat currencies eventually revert to their intrinsic value of zero. They always have, they always will. That's the currency you have in your pocket. The Federal Reserve notes, the Bank of Canada notes, the Norwegian kroners, etc., wherever you are in the world. And it always reverts to its intrinsic value of zero. However, the fundamentals are off the table in the monetary system and the markets as well. So it's impossible to really put a date on it because there's so much manipulation, but we know it's going to happen. So it's about being prepared. But with that said, John, going forward into 2018, I mean, what's 2018 going to look like? It just looks like desperation from all angles today.
Well, what we're seeing, and I read a recent article from Quartz, I believe it was, and when you start to see that they are starting to talk about the demise of the US dollar, then you know that things are starting to really come down.
That last second, I told you so. So when it does happen, they're like, see, we told you so.
Yeah, so they're coming out finally and talking about this huge shift that's happening away from the US dollar, because it's a step away from the old system. And people are trying to figure out what the hell to do with their economies, what to do. The problem is most economies today sit on the same type of system, so they're linked together, and all these banks are linked together with derivatives all over the world.
Central banking cartel.
Yeah, it's just like a massive web that they knitted. So all of them, if you go down, you're gonna go down. Everybody's going down with them. Yeah. So there's no one big bank that's gonna go down. With that one, that starts the whole
it's a domino effect.
Yeah, it's a domino effect. It's a house of cards that they built, and it's coming down big time. What's really happening behind the scenes is you start to see. I was reading an article about Canada's economy, and that more and more people are getting into arrears, which is basically foreclosure, but it's called something different. It takes way longer than in the States. People are starting to max out their debt, and at that time there's no more money to really borrow to anybody. There's no more money to really be able to fuel the massive bubbles that have been created. Now what's interesting is this whole bubble that have been created, a lot of people are now starting to exit to safety. And to safety, we mean we've been looking at several different things. Of course, cryptocurrencies is number one safety currently.
Decentralized, off the grid.
Because it's not manipulated. A lot of people say, it's a tulip mania. They don't understand first of all, the underlying blockchain, which is a massive innovation. It could change everything.
It already is.
Almost 90% of different markets that we deal with, and technology could change everything. Because there's a record-keeping tool. It's like a ledger that you would always have a record of what has happened. You could replace most of the governments in the world with it. Not that me and Josh likes government, but if you want a government we're voluntarist,
self-government,
you could, you could
be your own central bank. Yeah. And I mean, with that said, John, looking at Bitcoin, of course, there's scarcity. Tulips, there was no scarcity. You could just grow an insane amount of tulips and never stop growing tulips. There's no scarcity to tulips. There's scarcity to Bitcoin.
Yeah, of course, it's people believe that it's they call it a hyperinflation of Bitcoin. Well, the problem is Bitcoin's price doesn't go down when even a fork happens. It actually just extends its price, if you can call it that, with the new currency that's on top of it.
It's a hyper deflation. However, it doesn't affect the price of living in actuality. So you're just gaining more value and wealth as the days go on.
Yeah, what we would have seen if cryptocurrencies were to take over fully, of course you would start to see some inflation. Well, there is inflation in Bitcoin. We got to understand that. Like currently, there will be inflation in Bitcoin
by the fundamental mathematic creation of tokens. Yeah.
Because it would always be inflation until I think it's 2100.
2140.
Yeah, 40. Yeah. When it's the final 21 million Bitcoins in existence.
Yeah.
But also going back to something that too many people forget with this Bitcoin craze, it's gold and silver. It is so undervalued right now. I'm buying.
Yeah,
I know. I'm going.
Stephen Kendall mentions I think he predicted at about $70,000 for an ounce of silver in the future, which it makes perfect sense because there's so many ETFs, there's so much manipulation of the market. The banks are keeping it down, and when the banks stop keeping it down, when the banks go down, and we're seeing every sign of that with the Bitcoin market, etc., then it'll be like that beach ball that they've been pressing down forever, popping up out of the water and, bring great prosperity to the gold and silver market on the free market, which is important.
Well, here's a prediction for 2018-19 maybe. We don't know yet exactly. It could be 2020, but I see it coming very soon. They're desperately trying to raise interest rates in order to do that 5% drop. That's the average drop that they need in order to fix the economy.
Which was last time, which will be a lot more this time in reality.
But I don't think they're going to be able to jack it up enough. And if you go and read Kenneth Rogoff's book Curse of Cash, and he'll tell you exactly what their plan is. Their plan is to go negative, which is totally fine with a 5% drop currently. Well, the ECB is negative. All over Europe is negative interest rate. Japan, Switzerland, Sweden, Denmark. All these economies are in negative interest rates, which is completely insane on a historical scale. It's never happened before. And it's just pure manipulation of the system in a desperacy of keeping it alive. They become really, really great at manipulating this fiat system because this one has lasted for very long.
Yeah, absolutely. And just finishing it off, I just wanted to mention looking at the financial system, so the monetary system and the markets, the debt-based derivatives in the markets and the vast printing, quantitative easing, there's fractional reserve, all that craziness that's happening on both sides. It's kind of like, when you read the mainstream media articles like the one from the Financial Post, it kind of reminds me of someone, creating a Jenga structure and them saying that they are stabilizing it by taking pieces of that Jenga structure out, little blocks out of it, or saying that they are stabilizing a skyscraper by cutting the support beams, or just going into actually taking away the stability and calling it stability is the height of insanity. And that's what we're watching in the financial system. That's what we're watching in the markets. And that's why the solutions are so important.
Well, first of all their models are flawed at the central banks. First of all, love or hate Jim Rickards, but he's right about the complexity theory. Our markets are extremely complex systems. They're like, the biological systems where you take out one species out of that system and suddenly it just collapses the whole pyramid underneath it. And that's what this system is. It's so complex that there's so many snowflakes just constantly falling down, and this avalanche is just set to come. Yeah, set to come down.
All these Antifa people.
And hit the Federal Reserve building at the bottom of this massive mountain that they built now.
Yeah, absolutely. So for those in the monetary system, for those manipulating the markets, keep on destroying those support columns. The people are waking up, and no matter what you do, no matter how much manipulation you put forward, the people are always going to win. Alternatives always come up, and we always gain. Go back to the free market. Go back to great innovation and competition, but just looking at the solutions before we finish it off. It's always the food, water, shelter, self-defense so you're not gathering things for the toughest guy on the block, and of course gold, silver, assets,
real estate,
Bitcoin, that which is decentralized. Stay away from the centrally planned systems around the world. Stay away from the banking system. Stick to things that you understand. Do your own due diligence. And it's better to be overprepared than underprepared. Be financially responsible. Be self-responsible. Be self-sustainable, because you cannot have freedom without responsibility.
Yeah, and one last thing before we get going. Central banks have always failed. There's never been a central bank that have managed to live forever. So it's going to happen.
It's absolutely going to happen. We're seeing history rhyme over and over again. So thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here at WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the Anti-Defamation League comes in and flags all of our content as hate speech. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, where you get paid in the upvote of your post via Steem, the cryptocurrency. You can also find our Bitcoin address in the description and the comments below, as well as on the screen for you to scan if you please. And don't forget to come on down to Anarchapulco in Acapulco, Mexico in February, one of the best events of the year, and you can save money on your tickets by typing in promo code WAM. That's WAM. We'll leave the link below for you, and until next time, don't forget to subscribe. This is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.